Markets are rebounding from Monday's sell-off, but is this the calm before the real storm? Joining me today, Todd Bubba Horwitz of BubbaTrading.com. Bubba, always a pleasure. Thank you for joining us.
Always great to be with you, Daniela. It's the highlight of my day.
And mine, Bubba. And recently you told me markets have peaked. Are you sticking to that? Why do you say that? And would you sell all your assets or simply hold?
Well, first thing, the markets have peaked. May 1st was the top of the market, in my opinion. I think we have a significant downside pressure coming. I think that the rally today is just simply a dead cat bounce, which makes sense after you've gone down basically 6 out of the last 7 days. You're going to get a bounce. It's on no volume. The volatility is quiet. So, yes, I think it's going much lower. I'm not selling. I don't sell as an investor. I don't sell. I actually hedge. But even if you didn't hedge, you're always better to stay in instead of trying to time the market, because, again, it can happen any time. I don't liquidate my holdings. I just keep trying to accumulate them.
Okay. How about on the VIX front, otherwise known as the fear index, has trended up the last month, but is still down considerably since the start of the year. Is there just not enough in terms of news or economic developments to spook investors? What's going on here?
Well, I think that when you look at the overall market, you look at the VIX, there hasn't been enough volatility because, A, most things are priced in, so there's not as much uncertainty to begin with. But also, I think what you're seeing is the fear doesn't just run the VIX. The fear is an index based on options. But when you look at the U.S. dollar, which continues to go higher, that's a fear gauge. When you look at the Treasury bonds, those continue to go higher, bringing yields down. Those are fear gauges. So there's indicating there's some fear in this market. But remember, always at the top of markets, investors are the most complacent, which is why we always get to dramatic sell-offs when they do come. And when this one comes, I think it'll be a lot like Monday, and it'll be a lot of down days, and it'll be down substantially.
Okay. And finally, Bubba, gold. We're one step closer to your $1,400 call, though still kind of far away. Do you like what you're seeing here?
No, actually, I don't. I mean, I still think gold will hit 1,400, but I think in the stage it's in right now, it's got a good chance to break down from here and maybe get down to 1240 or 1220 before it's all done. I mean, the key level right now to watch on the downside is 1280. If 1280 holds, and this may be the bottom. But yesterday's rally was no more than, I think, more of a little bit of a short squeeze. You can already see that basically 1300 held it in, and we're back down around 1294, 1295. If we break down below 1280, I think there's trouble. If we can hold in these levels and consolidate for a week or two, then maybe the bottoms are in. But, I'm still concerned about gold. But again, I think it will go higher, obviously, eventually. But in the next day or two or whatever, I'm watching that 1280 very closely.
Okay, and silver, taking a nap, taking a long snooze?
Silver reminded me of the grain markets. They just go down every day. Look, I think you should own silver. I think certainly the risk reward here is unbelievable in your favor. Yet it just doesn't go anywhere. But certainly I'm a buyer. I think it's fine, and I'm willing to take it lower if it goes lower. But I do think that at one point, with the ratio of 87 to 1 against gold right now, I think it will one time just explode and close that ratio and close that gap. And I think that's really what we'll be looking for.
Bubba, always a pleasure. Thanks so much. We'll see you real soon, maybe next week.
Thank you, dear. Have a great day.
All right. Thanks for watching, and we'll be back tomorrow.